Hello everybody. So today I want to talk about platforms. Platforms are my favorite business model because companies that have platforms do not need to create the product that is sold on the platform, right? It is the people registering on the platform, providing services on that platform that create that product. And because of that, platforms have typically outstanding margin, software like margin, at the difference that they actually don't have to even make the product. The product is made by people signing up on a platform. That's why I love platforms, and I'm always looking for new platforms to look at and invest in and consider. And what prompted this video is Rover. Rover is a platform that was recommended to me in the comment section and that I had never considered. I didn't even know it was a traded stock. I had heard the name, but I don't own any pets, so I don't know much about Rover. But when I looked at this business, I kind of fell in love with it. Rover is an excellent business in my view, and dirt cheap. It is the cheapest platform out of the three platforms that I have in this video. So in this video, I'm going to be talking about Rover, Fiverr, and Airbnb. And Rover is the cheapest, and they are also the company that is predicted to grow the most over the next 12 months at 35% growth. So you're paying very little for that growth at a 0.17 for a company like Rover. Fiverr is not predicted to grow very much, but it's a very cheap stock trading at 2.5 times sales, and therefore that growth at Fiverr is also cheap. And Airbnb has the most expensive growth, but that is to be expected since Airbnb is a company owned by institutions and so many of the benchmarks, so it is a more expensive company. Hence, the total potential return is potentially lower for a company like Airbnb, but also the risk is lower. But it's okay. On this company, I like on this channel, I like growth and I like hyper growth, which is why I want to talk to you about Rover. So let's get started with Rover. So Rover is a company that is forecasted to grow sales at 35% over the next 12 months, and it's very high margin at 77%. What does Rover do? Well, believe it or not, Rover is a hyper-specialized pet services company. It introduced trust in the world of dog sitting and dog boarding and dog walks and whatever has to do with taking care of pets. And again, this stock was recommended to me yesterday in the comment section as I was covering Chewy. And I can tell you right now, I like Rover much better than I like Chewy. So what it does, it's a platform, right? It's an app, and you would select, for example, boarding for your dog. You want somebody to look after your dog while you go on vacation. Well, you would select boarding, and I'll go through different services that they offer. But one way to think about it is that it's both a mix of an Uber and an Airbnb for pets. And why do I say it's a mix of an Uber or an Airbnb? Because it has features of both. Like, for example, when we talk about dog walks or what they call play dates, I just found that out reading about this website, would be a mix of an Uber with say a walk. So it's someone who walks to your house to have your dog take a walk, or walks to your house to change your cat litter. That's essentially what it is. And it's a mix of also of Airbnb, because you can rent space for your pet at someone else's house. So this is not only this is inducing demand, creating new demand, like dog walkers. That's a job that didn't exist in the past. So this creates a new job that did not exist in the past, induced demand, fully new demand, and it's also disrupting existing demand, like daycare for dogs and any types of animal caring facility. This directly disrupts it, which I find very interesting. I like how recession-proof this exposure is, and how this exposure to the pet industry, in my view, is very long-term. And I like the idea of getting exposure to this stock. It's a stock that I just started studying as of yesterday. But as you can see, this stock has had amazing revenue growth. Revenue growth at 57% cumulated annual growth rate. And very interesting, in 2020, right, when everybody was home, this is a stock that saw its revenue tremendously drop, right? Because why would you need a dog sitter if you are going to be at home? But the company has since spiked tremendously. And this is a company with a lot of retention, 82% of repeat bookings, 80% of revenue retention. So what this tells me is that whenever someone starts using Rover, they stay with Rover, and whenever they go on vacation, they use Rover for their pets. Also, it's important to note that they create this induced demand, because in the past, if you had a pet and somebody needed to look over your pet, you would typically ask your family or your neighbors, right? So you're monetizing a part of a market that did not exist. Again, very interesting value proposition, in my opinion, in this sector. And again, this is not a full video on Rover, but if you look at what they do, and obviously they have a take rate. From what I look, the take rate is above 15% of a transaction is what they take. But they have different sorts of fees, etc. So and that depends on the type of transaction too. But here is where their bookings come from, right? Most of their revenue comes from. So most of their revenue is for overnight stays. So you have boarding, where you drop a pet to someone else's home, and the average price for that is $45 a night. Can you believe that? I mean, this is amazing. And then you also have house sitting, where you have just people stay at your house to look over your pet, and that's $40 a night. So 45, 40, that's you're getting close to the old prices of hotel rooms back in the day. Like 10 years ago, you could probably get a hotel room for this cheap 10 or 15 years ago. And so this there's a lot of money to be made here. And that right there, those two services are 70% of the revenues. And of course, 30% of our revenues. And look at how innovative this is, in my view. 18% is from drop-in visits. So that's typically when you have a cat. When you have a cat, the cat will typically not move houses. The cat will stay in their house. But you would pay someone $20 so that they just come change the litter box, which is mind-boggling. But this is 18% of the revenue of that company comes from drop-in visits to take care of cats. Again, amazing business, creating money out of thin air. I mean, it doesn't get any better than that. You have dog walking, 9% of the revenue of this company. Keep in mind, this is a company with $200 million in revenue. So 9% of that is dog walking. I mean, this is crazy. $20 per walk and daycare. So I love this business. I really, really love this business, especially if you watched my video from yesterday where I explained the long-term trends of pet ownership. This is not a practice. Having pets is not a practice that is in decline. It is a practice that is increasing, and this is a company that has cornered the market. And I have a hard time imagining how someone could compete against that company. They've created really a niche, an amazing niche for themselves. And let me know in the comment section what you think of Rover, please. And I may do a full video on Rover, but I don't want to spend too much time on a video if nobody's going to watch it, because based on my experience from the video yesterday, very few people watched my Shoey video yesterday, so this may be something that does not interest my viewers. So I just want to be cognizant and mindful of that. But if you find this business as interesting as I do, let me know in the comment section. Let me move on to my other platform. The other platform is Fivr. So Fivr is a company whose stock has been an entire roller coaster. The stock really went through the roof during 2020, and it's been left for dead now. And we are in that phase where this company is left for dead. But nonetheless, this is a company that focuses on the future of work. And what do we mean by the future of work? We mean work where a lot of people are going to be freelancers and freelancing, where people want to work from anywhere. Right, this matches the Airbnb trend that I'm going to talk later. Teams are global and remote. And why would you want to have a global team? Because you want to have the best coworkers on your team. People prefer to work digitally. Companies typically prefer to pay for results and action rather than they would pay for, say, a monthly salary and hours. There's a lot of benefits to the future of work, and Fivr is a bet on this future of work. The bet that people coming out of high school, of college, Gen Z, they may very well decide to be freelancers and work on their own. And this is something that has existed for a while, but really Fivr just like in the case of Rover or Airbnb, as we explain later, Fiverr creates this end-to-end platform, this layer of trust. It adds a layer of reviews, which makes sure that really as a company, when you use a bunch of different small workers, small task workers, these workers do a good job. It really enforces that. And actually, Fiverr has a very high promoter score for both parties. The net promoter score is in the 70%, which means that 70% of users of Fiverr would recommend it to others, which is amazing. Now, I put this flywheel chart because it explains very well the way these platforms work. That's why I love platforms, right? So here on the platforms you have the buyers. The buyers sign up to the platform. And why do the buyers want to sign up to the platform? Well, they want to sign up to the platform because there's a lot of sellers on the platforms. It is the sellers, i.e. the freelancers, the taskers, the people who make these small tasks. The more there are, the more this attracts more buyers. And the more there are buyers on the platform, the more this will attract sellers. So this is the concept of a two-sided marketplace. The concept of the platform is that really over time, this is a platform that's not going to need to advertise because people will go to that platform because they know that's where the workers are at. Just like we all go on YouTube because we know that's where the content is getting posted. The content is getting posted on YouTube. YouTube does not need to advertise on television or on billboards or wherever to get traffic. You go to YouTube for the traffic. You go to YouTube for the videos because it's a platform and you know that's where all of the videos are. So that's the same way here. So this is a very network effect heavy business, and I believe this will get reinforced. And this is more of a bet on a really long the long-term future of work and the nature of work in the future. Their revenues, they are growing again. They're projected to grow this year at 12%, and that's kind of a problem. It's too low for me. It is too low for me to get behind this company. And unfortunately, I wish it was growing as fast today as it used to be growing from 2019 to 2020 and 2020 to 2021. But we can see that right now the market is in this knee-jerk reaction where a lot of freelancers are really getting back to full-time jobs and not to gig work. But it all depends your opinion on this market and where this market is headed. I think this is a company, if unemployment rises, we love all of the talk of the Fed trying to crash the economy. If unemployment rises, in my view, this is a company that would greatly benefit because a lot of people like the flexibility of working there. And my last platform, which I own, it's not growing the fastest, although I estimate that this platform, in my view, will grow at 30% per year, at least until 2030. That's my view of studying this company for a long time. That platform is Airbnb. So does Airbnb need any introduction? Airbnb is, of course, known for attempting to disrupt hotels. And if you listen to the call of Airbnb, the CEO, the last call, the CEO was talking about this, Brian Chesky, and he was saying that Airbnb actually only disrupted about 10% of hotel demand. And there is a lot of hotel demand to still be disrupted. So imagine that. Imagine if they've disrupted just 10%, give Airbnb another 10 years. How much of the hotel demand will be disrupted within another 10 years? Will it be 50%? Will it be more than 50%? I mean, this is a best cost product. This is a highly compelling product for many use cases, especially the use case of traveling with a family. That's cheaper. Airbnb is cheaper when you do that. If you want to travel, if you just care about having a room and you just want to rent a room, Airbnb is cheaper. I know the media, there's a large share of the media that shows you that Airbnb is more expensive, but these are edge cases. This is not the majority of a use case for Airbnb. The majority of a use case of an Airbnb is cheaper and better. That's the majority of the use case. But that's not the point. So when I look at hotel demand and disruption of hotel, I'm very happy to just invest in that. I think this is a company that could outperform if you just invest for that. But in my view, the bigger picture is that Airbnb aims to disrupt much more than just hotels. And in my view, what they are possibly disrupting as we move forward is mom and pop landlords. I think this is a much bigger story if they start going after mom and pop landlords, because if you really think about it, renting for 6 months, for 12 months, renting your house for this long with Airbnb is actually very, very, very safe right now, because it adds a layer of trust. There is a layer of trust when Airbnb facilitates, traditional rentals that you do not have in the regular process. The regular process in the U.S., you may do a background check, and you may do a credit check, but that's not going to give you the level of trust, the level of granularity that, say, a company like Airbnb would give you, where you have dozens and dozens of reviews of your would-be tenants. You can read dozens and dozens of their reviews, and they can also read your reviews because you've had more people. So this creates a layer of trust that you would not necessarily have in the traditional rental world or rental business, where it's just a handshake that seals a contract, and you leave your house and you rent your house with a handshake, right? It's not as strong. This is much stronger in my view, and this layer of trust, right, is best shown by this. This is, you have a damage protection, liability insurance, reservation screening, guest identity verification. These are all things that Airbnb puts on top of these transactions that create a lot of trust. And right now, about 20% of Airbnb rentals right now are for stays that are longer than 1 month. And in my view, what we could get into a world where we have flex leases, where many Gen Z, many millennials decide to simply live on Airbnb. And you live on Airbnb, and you may stay 3 or 4 months somewhere, and then 3 or 4 months elsewhere, and elsewhere, and elsewhere. To me, this is a big story. Airbnb is a big story, and it's kind of a sleeper stock. A lot of people are sleeping on this opportunity. I'm very happy to own Airbnb. Airbnb is actually one of my top 10 stocks. It is the only platform that I own out of these 3. But I will be studying in greater depth Rover. And let me know in the description if you want me to cover Rover on this channel or not, because this is a very interesting platform, very interesting market in my view. Thank you so much for watching. This was not investment advice. This was just entertainment. I hope you were entertained. I appreciate your likes. I appreciate your subscribes. And please follow me on X. Thank you so much for watching. Have a great day.